Evening, ladies and gentlemen. Today I'm going to discuss how I scalp using options. Okay. It's you might be surprised at the simplistic approach I take when trading options. It's how I trade or scalp using options. It's a very simplistic approach, and of course, I also don't give stock picks or investment advice, so thanks for reading that. All right. So many people, I think, sort of get intimidated by options. Most people, they get intimidated by options. And the truth is, you don't really need to trade options to make money, or you could do it doing for with stock or options. Here's the point, though. The point is, the point is, when you're trading options, you have a huge entry, you have a huge opportunity entry when you have a small account. So, for example, if you wanted to trade Tesla, just whatever examples here in the chart, and I'm using Schwab, and what you see on the left side is the common stock, and in the middle window, or excuse me, in the right window on your screen, the one next to it, you see the options. Now, my options are always set for the first out of the money strike. It's a setting that I actually have. So no matter what symbol I type in, it'll always go there. So even if I type in Amazon, you'll see Amazon automatically goes to the $3,250 strike because of where the stock is trading at. It's the first one out of the money. Now, some people ask me, well, Mark, why do you usually go for the first one out of the money? That's what I'm comfortable with. You'll notice things that are not on my screen, like the Greeks. You'll notice that I don't have the Greeks on my screen, the theta, the delta, etc., the gamma, the all the things I don't have on my screen because I honestly don't use them. I've had one person over the years laugh, "Oh my God, how do you know what you're doing with options? You don't even understand the Greeks." I encourage you to learn as much as you want. But I really mean it when I say I take a simplistic approach to the market. I take a simplistic approach to the market because that's what works for me and that's how I make money. I don't need or want to learn the Greeks. I don't take the delta or theta into consideration because I am using the options as a vehicle to trade just like I would trade the stock. That is why. So, for example, we're going to give you a hypothetical situation here based on what we could show you, and I'm going to show you exactly how I do it. So, typical bullish chart that, we love here in the Newsbeat live room is, something that looks sort of like this. And let's say you get a 2 minute, red on the other side, and, you get sort of something on, like you got a 1 minute on the left side. And on the right side here, you got the 2 minute chart, which looks sort of like this, I guess. And then you have the formation here of the red candle, and it's like that. And, the next candle's about to open, and you're basically looking for this right here to go up, right? You're looking for that green breakout. You got the 1 minute on the I know it's uneven and I pushed the 2 minute to the right. But we're given a very vague example here, and that is the importance of what I am talking about. So, the next, you know what? let's say this bar sort of looks like even better, like this. And the 1 minute bar here is about to close. 1 minute, 2 minute, all right. And this bar is about to close, and you're pretty much looking for the top of this trigger to go through. Now we happen to be watching Amazon, and just to cut through the entire chart, the top of that line is coincidentally $3,250. Okay? Suddenly you got the red on the 2 minute, you immediately look at the one. You're looking basically for when this bar closes for the next bar to go like that. That's what you're looking for. All right. Now what I do here is I already see, that 3250 is my trigger here in Amazon. Immediately, since I'm front running the bar close at pretty much 59, and I've tested it a million times, buying it at 55 seconds or buying it at 59 seconds. I was trying to find like is it paid to wait like front run it by 5 seconds? Honestly, usually not. In the case where the bar just keeps running up and up and up and up and up into the close, like it did once today really well in Tesla, sure. But even if you bought it late, you were golden. So like literally as this bar is closing, I'll go ahead and I'll just click buy to open right here. I'll mark it in this example, 10 option contracts. The spread is a little wicked because the day ended. This would be an uncommonly wide spread, like $12.05 on the bid, $13.85 on the offer. But in actuality, it could show like, it could be 1205 by 1280, let's say. Let's say it's 1285. So pretend that offer is even $1 lower because the market is closed now as I speak. You can already see the extended hour numbers over here. And I'm just looking to buy. So as this 1 minute bar is closing right here, this green 1 minute bar, and it's about to go up, I will immediately buy here, even as the next bar opens or right as this one is closing. We're dealing with a second of time, and I don't think it's really a big difference. So I'll go ahead and I'll mark it in. I'll just click buy to open. After I click buy to open for myself personally, I'm planning on marketing out of these calls. Some people will use limit orders. If you wanted to use limit orders, you could quickly set to limit. Let's say you wanted put an offer over here, you could just literally click. If you notice on Schwab, if you click it, you'll see the limit price changing to whatever you want. You see that as I'm left clicking? You can manually put in your price over here. You could say $15.26. You click sell to close. Right over here, it's hard to see, but I actually have a cancel button right over here. This is actually a cancel button right there. I know it's blotted off, and it looks kind of small, but that's if you wanted a limit. So what I'll do is I'll literally click buy, and I'll move over to sell, and I'm ready to sell. My mouse, I click buy to open, then my mouse immediately goes to sell to close. However, my eyes are over here the entire time. I'm focused really on this number, the top number here. Now, what do I want to see at this point? Well, after I buy, I want to see this number going higher. I want to see the offer, the ask, putting in higher numbers, 3250, 3250 and a half, 3251, 3251 23, 3251 49, 3252, 3253, whatever it is. I want to see that number right over here going up. Sometimes I'll go down a little and I'll still hold. It depends. For example, maybe you go to 3251, 3252, and to 3251 and a half. and it dropped 50, the ask dropped 50 cents, and I'm looking over at the Qs, and the Qs are still going up. And I'm like, you know what? It might go down more, it might go up more. I'm holding it here. So when people say, like, well, when do you sell? It's like, that's the problem with traders. They want the little easy bitch answer. There is no little easy bitch answer. It's as easy as possible. Are the Qs going up, or is the market going up or down? Up? Well, now you have an excuse to hold because you're up money and the market's going up. If you bought it and it went down against you and you're down money, there is no excuse, regardless of what the market is doing, to hold it based on my methodologies. Okay. So after hitting buy to open, I literally click sell to close and hope that the prices change and I get some good price improvement in between. That is the entire trade. Yes, I use the word hope. I hope I get good price improvement. And if I don't, I'll let you know. And if I do, I'll let you know. That's why I usually say, all right, I got good price improvement on the weekly 3250 calls in Amazon, guys. And some people will be like, oh, I got good price improvement on this, or I got bad price improvement on this, because we're sort of sharing with each other the value and what happened to us. It's almost like we went into the woods and we came back out and somebody's like, oh shit, I saw a bear. Oh yeah, I found the pot of gold. Oh yeah, where? Where did you find it? All right, it was right over there. Don't go where the bear is. Go where the pot of gold is. You feel me? Now, the advantage is if you don't know the way options work, again, for me, I'm always going first contract out of the money. Some people, they'll say, Mark, I have a small account. I have to go for the $3,300 calls here. I can't speak on that behalf. I just simply don't do it. There's some people who do it. There's some people who want to scalp, deep out of the money. As a general rule of thumb, I am always the first contract out of the money. Now, what does that mean, the first contract out of the money? Well, you'll see in Amazon here, you have 3245 calls, 3250, 3255. It goes up by $5 increments, right? So since Amazon here is printing whatever, 48, 33,248 last, $3,250 is the first higher number. So an option call, which is a bullish bet if I buy it, out of the money, the first higher number option contract strike is what I buy. So if a stock is, at 100, like, so for example, if I'm looking at Apple, notice in Apple here, the increments only go up by dollars, 127, 128, 129. So since the stock is at $127.38, it automatically comes up with the 128 calls. This is what I prefer. Now, some people say, well, why not the 127 calls in the money? Be my guest. Why not the 126 calls? They have better Shmeda data. I gained a lot of weight thanks to COVID staying home. Look, I don't give a shit what you do as long as you're doing it consistently and making money. People think I really like there's some genius. The only thing I would warn you about is going out beyond the first out of the money option. Like I don't want to do the 128s. I want to do the 130s. It's like good effing luck. Granted, it's a Thursday and the 130 calls are very cheap because tomorrow's Friday, and the odds that Apple's going to rally 2.5 points and more, to make that bet costs very little. Okay, so I like the first out of the money calls. You want to do whatever you want. Be my guest. Be my guest. And this sometimes sometimes you can see all the Tesla calls here are in $5 increments. So I would be on the 590 calls. Now, with all this being said, with the options, what are the advantages? Well, now that we're on Tesla. If I wanted to buy 100 shares of Tesla here, it would cost me whatever, let's call it 500, just make it up, $586 a share. We'll take the cents apart. 100 shares would cost me $58,600. Okay. If Tesla went up to 500, let's say I bought it at $586, 100 shares. So I would need buying power of 58,600. If I were to do that and the stock were to go to $588, I would be up $200 or 2 points considering I sold there, right? However, if I took 10% of that money and I bought 10 of the 590 calls at, let's say, $5, the right about the midpoint here, each one of these things, when you want to know how much your option costs, you move two decimals to the right. So even though it says $4.80, it costs you $480 because each option contract is the equivalency of 100 shares. So when you see $4.80, you literally need, let's say it's $5, you literally need $500 worth of cash in your account to buy a $5 option. And if I were to buy 10 of them, that would cost me $5,000, 500 times 10. Now, if Tesla moved from 586 to 588 and I had 10 of these calls, I'm going to make the number up. What am I going to make? 75 cents, a dollar on the options, or $750 to $1,000 with a $5,000 bet as opposed to a $58,000 bet with 100 shares, which would have netted me 200 bucks. Now, maybe you want to make a good argument and say, all right, well, if the stock went down $2, you would lose more money on the option calls, Mark, than you would on the stock. You are correct. Correct. But our strategies and methodologies are such that we are looking for the winning trade right away. We are not sitting there writing the position down into oblivion. When we buy a stock, as a generalization, and what's your opinion? You pretty much know right away if you're right or wrong. Do you guys agree or disagree with that statement? You pretty much know right away if you're right or wrong. And everyone's saying, yeah, 11 agree, right? I mean, for the most, as a generalization, right? I'm not 100% of the time. No, a generalization. You pretty much know if you're right or wrong. So if you're wrong, you're going to take that quick loss. If you're right, your stock is going to potentially explode up, and you're going to catch a small fraction of that green candle. And you're going to make your money. You see, the problem with Wall Street is nobody ever focused on timing. The great thing about the strategies that we created here in this room is it's all based on timing. People always have entry points, but the entry points aren't based on timing. Do they ever tell you, like, how many times have you done a strategy and it's like you buy here, you stop here, you take profit here. All right, how long is this going to work? How many minutes should I be in the trade? Oh. Well, how long should I hold it? Nobody knows. Nobody knows. So, I mean, you're asking after you click buy, how long do you wait before you get out? Again, you're looking for the easy bitch answer. The real question is, how long do you wait before you get out? There is no perfect. What if it goes up, hesitates, you're up money, and the market starts going down? You could hold or sell. What if the market starts going up? You could hold or sell. What if your number is 3 seconds? What if your number is 5 seconds? What if you look at your own personal statistics and you realize that your average winning trade is 15 seconds and your average losing trade is 30 seconds? Well, what do you do then? Maybe you should have a 15-second timer on every one of your trades, working or not. You ever think of that? You ever think of that? And the point being, the point being, that's such a great tool. That looks so cool. The point being with the options, the point being with the options are it's not going, you could do it with smaller accounts. Now I know what Wall Street will say, options are more risk than stock. Sure. If I buy, you know, equal amount of dollars in options as I did in stock, if I bought, 100 of these call options as opposed to 100 shares in Tesla, my face can get ripped off much quicker on a small down move, and vice versa. I get that. But the whole point of these options for me is to not hold it till expiration, to not do any complex strategies, but just literally buy and sell them the same way I would just do this common stock here. So literally, just like if I wanted to buy and sell Tesla, I'd click buy to I'd just click buy. When I wanted to sell, I would just click sell and the order type would stay on market. If you wanted to change it to something else, you could. But for me, I would just market buy, market sell. Do your own due diligence for what you think you should do. For me, on the option side, the same thing. I would just click buy, and I'd watch the stock here to see if it goes up or down, and then I would just click sell. So what I'm doing with these out of the money options is I'm just using an amplified gateway that costs less money to trade securities. I could throw in a lot less money. I'll be making and losing more money with the same, equivalency in dollar amount. But if I generally know that my trade is going to work or fail in a short amount of time, to me trading the option is phenomenally advantageous. And don't get me wrong, I think it's very easy. I think it's very easy to trade common stock. I think it's easy to just click buy and sell on the common stock and you could set up hotkeys and etc. I think it's easy to trade common. I think it's really easy. I also think trading options are just as easy. When I'm expecting really small moves, if there's this little shit name that doesn't move a lot, I'm probably going to go with common stock. If I'm trading a name that can move, Tesla, Amazon, 150 other names, I'll usually try to lean towards the options. Sometimes certain options have personalities. For example, I don't like Facebook options. I think again, they're not really that loose. They're kind of tightish. I just don't like trading them. I think they suck. In certain stocks, you'll have an easier time trading common over the options. In certain stocks, you'll have an easier time trading options over the common. So for Facebook, and again, it's just my opinion. For me personally, and a lot of people will agree, I think Facebook common is a lot easier. I think Boeing common is a lot easier. You're doing like a news flow play and the stock could explode. Options might be the exception, but just in general, news flow aside, stocks have personalities in which you will learn. You want to know what's the equivalency to, you know, running into a cement wall with your face first, like trading like Ford options or Verizon options or AT&T options with no news. That's the equivalency of hell. So, I mean, at the same time, at the same time, I will trade Facebook options depending on it, and I'll always try my best to remember to, all right, guys, I'm trading common or options, but you have to realize there there are people in this room who are doing 100% stock. You don't need to do options. The advantage is, of course, going back to it, if I had a $5,000 account, I might just cheer and, like you could see my buy right here would be 2,500 bucks. A lot of people would be like, "Oh my God, you're throwing 2,500, you're throwing half your account at one trade. That's crazy." And I'm sitting there thinking of your $5,000 account, like, what the F were you planning on doing with common stock? What were you going to do? 10% of your account, 5% of your account per trade, then you can't even buy Tesla. All right, maybe you have to go with a little small shit names, like some little shit $2 name and trade that. Be my guess. If in under PDT and try to make 3 trades a week and try to grow making 3 trades a week, trading common stock on a small micro-sized cash account waiting for settlement. You want to do that shit? Be my guest. The bottom line is when I buy this for $2,500, even though Tesla could get halted, Elon Musk could be found doing blow with a bunch of hookers on a private jet, and he could say my whole company's a scam and I stole all the money and I lit it on fire and dropped the ashes over the Pacific Ocean, and your stock can halt and you could lose 100% of your money. Okay? You could lose 100% of your money. What do you think? How much of this do you think I'm going to lose if I'm wrong? I'm literally, all right, so let's say I do five. I have a $5,000 account. Let's say it costs $2,500. Just it's an estimated buy. Let's say I bought 5 contracts at $5. It's $2,500. And I just literally click buy. The stock goes up or down. And I click sell. What am I really going to make or lose? A couple $100? $100? 200? 300? $400? I'm not losing any $400. F that shit. I'll be selling out way before I lose 90 cents or 85 or 80 cents on Tesla. I'm not losing that much money. And I'm not making any $2,500. You think I'm going to sit there and make 5 points on the options? Hell no. But what I do know is after I sell and I take the gain or loss, that money is going to be freed up till tomorrow. So I might be buying Tesla. I might make 40 cents. Shit, I have a $5,000 account. I just made 200 bucks and I have another trade. I'm going to make maybe one more trade or 0 more trades and I'm going to log off for the day. You make 200 bucks on a $5,000 account, you are gold. You are beyond gold. I'm not even going to come to you with the bullshit and say, "Oh, you made 4% of your entire account." I don't even want to talk to you like you're an imbecile and trying to show you something is bigger than what it is. But think of it like this. You make $200. Tomorrow you have $5,200. You make another $200. You have 54. You make $200 every day of the week, which is, again, I can't tell you what you can or cannot do. In my opinion, phenomenally doable with a $5,000 account. Like so many people want to do these stock challenges. The problem is if I do a stock challenge, I'll be sacrificing shitloads of money by trying to purposely pigeonhole myself in a small account. It's a really cute challenge. I might try it one day. I might try it one day. Like, all right, one day and maybe just like the morning, maybe like blast out my buying power and then just go into my normal account. Like, I would consider doing that. But it's not about what I can do. It never was. It's about what you can do. People get so hell bent on money that other people make. I sit there and I'm like, holy shit, it's not like what? How can you improve yourself? Okay? Believe me, if I wanted to take a $5,000 account, my guess is at the end of the month I could probably turn it into 40,000, 35,000. It would be hard, it would be patient and I'd be missing a lot of trades, but I'd just sit there. I'd attach a little to, I would just save half my P&L, half the dollars for news flow and half for technicals in the morning. And that's what I would do. And I'd be like, "Ooh, look," and that's my and then I could come out like one of those a-holes and be like, I made like 600% of my account in a month. Do you want to know how to do that? And it's not like I could ever do that on $1 million. I'm just some blubbering buffoon trying to make shit up, trying to over impress you with large numbers. Yes, I would rather make $200,000 on $1 million account than $30,000 on a $5,000 account. Oh well, that's the type of person I am. I got a better one for you. I'd rather make $200,000 on $1 million account at the end of the month than $199,000 on a $5,000 account. How's that? How's that? Does that make sense to you? So when you're dealing with Tesla, when you're dealing with Tesla here, like if I had a $5,000 account, I was doing this for the first time, I wouldn't do one. I would do one contract, and I would just buy and sell, and I would just get a little bit of practice. I'd take my wins, I'd take my losses, I would take the smart trades, and I would just slowly try to build. If I only had enough to afford a $5,000 account and I had bills, I'd be trading the morning as a Newsbeat bandit. I'd work no later than 10:30. Yeah, I'd be missing out on a lot of shit, but that's what comes with a small account. Unless you're one of those people that, you can afford to just sit here all day and maybe you work at night, maybe your hours are different, or maybe you have money in the bank, whatever it is, and you want to save some for potential news flow, be my guest. You could do whatever you want. But for me personally, if I had a $5,000 account, holy shit, what a blessing to be in this room. They're not nickel and diming me for everything. They're giving me so much value through the free education, through the free answering this, the videos, the emails, the psychology. I'm getting all of that. And I could trade, and I could leave early, and I could work my full-time job. I, this room, all the features we offer you were designed for people like that. For people who are struggling, trying to get to the point where they can make money. The people who don't have it, I understand that. I understand that. I understand that. I grew up Brooklyn apartment ghetto complex. I know what it's like to be a broke ass, you know, fill in the next word yourself. And I understand what it's like to maybe you've been through the ringer and you have a very small account and you're coming back and you're trying to. I get it. I understand that struggle. I understand the struggle is real. So that's how I would approach the market. What I wouldn't do is say, okay, well, I'm going to go for the $650 calls or something ridiculous like the 625 calls, or, I wouldn't do anything that ridiculous with Tesla or Amazon. I wouldn't go deep out of the money. I would just rather not trade it. Because as soon as you start bending these rules are here for a reason. As soon as you start bending them based on your situation, and I feel you for being in that situation, it gets tough. Things get tough. So if you haven't, and again, I can't tell you to open an options account, do your own due diligence, know the risk. You're risking 100% of your money on every trade. That's how you have to approach everything. Are you going to really lose 100%? God, I hope not. But what I would do, I would open up a cash account with Fidelity or Schwab. If I had $5,000, I'd open up a cash account with Fidelity or Schwab, um, and I would follow this methodology. That's what I would do if I had me personally, for me in my life, that's what I would do with a $5,000, $10,000, $15,000, $1,000, $500, $20,000 account. And if I had $25,000 or more, I would go margin and I would just trade options doing the same exact thing. Hmm. Hmm. So, yeah, that's pretty much how I use options. It's just, again, a very simple vehicle to scalp stock. And I just keep it that simple. Buy token, sell to close. Buy token, sell to close. If this stock goes up, generally I make money on the options. If this stock goes down, generally I lose money on the options. That's how you trade options without knowing shit about Greeks. That's how ignorance is bliss. That's how I do it. That's how I do it. I've been trading 22 years. I have absolutely zero desire to learn the Greeks at this point in my career. That might change. I know some of it. I don't track it. I just keep it simple and stupid. It's not the right thing or the wrong thing for me to do. It's just what I do. And that's how I trade options. Hope you guys enjoyed this video. Happy trading.